Okay, 29th April, Monday, market opened at 9:15. You can see that there is a bullish candle and there is couple of bullish candle, and you have taken a long trade because it is taking support above the CPR, and you expect that market is looking bullish. And after that, what happened? After that, it retraced back to the first candle low. Your stop loss is below the CPR, and after that, you see that after that there is no movement and it is making a consolidation, right? And you thought, if I don't take my profit, it will come down and it might take my stop loss. What you have done, you have taken your profit here. You have entered somewhere on the first candle. Your stop loss was below the CPR and you took the profit here. And you felt very happy that you made the profit. You closed your system. And after that, you went to do some other work. You are not looking at the chart. And around 3:30, you came to see what's happened in the market. And you have seen that you booked your profit somewhere here. After you have booked your profit, Bank Nifty went almost till 49,400. You booked your profit somewhere near the 48,700. So that means you missed the opportunity to make another 700 points profit. You booked your profit too early, so you could not catch this entire move. And you started repenting that had you not booked your profit here, then your profit would have been very big on this day. Then you decided, next time I'll not book my profit too early. I'll only book at the end of the day. Then again on May 28th in Bank Nifty, it made a similar setup. It took the support above the CPR, made a bullish candle, and like earlier example, you thought this day also it is going to be a big trending day. You will not take your profit too early. You will wait until the end of the day to make a huge profit. And let us say after that what happened. After that, you can see that market started going down and hitting your stop loss, and it did not go in a trend like how it happened earlier, right? If you have taken a long trade on the first or second candle expecting market to go up, but it reversed and you got trapped. So is there any way to know when market will go in a huge trend and when market is likely to reverse, so that you can decide when you have to take your profit too early and when you have to wait till end of the day? Is there any tricks? Is there any method? Is there any way to know which days are trending day and which days are reversal day? Yes. And that is what I'll be discussing in today's Diwali special video, that is 4 methods to know which days are likely to be a trending day. That means instead of booking profit too early, you can hold on to your trade so that your profit can be bigger. And same time, I'll also show you the 4 methods to know which days are not a trending day. That means most probably such days are trap day and reversal day. So as you know that every Diwali I make a special video with full of content. So this Diwali I am making a special video, that is the trend following method. Why trend following is so powerful? Especially if you are an option buyer, if you are a trader with a small trading capital, then trend following can be one of the very profitable way of trading because of the very good risk reward. It can offer risk reward like 1:4, 1:5, sometime even up to 1:10 if you can hold on to your trade till the market close. But you should know when you have to hold on to your trade and when you have to book your profit early. First method to know which days are likely to be a trending day. For that, you should know that trending day doesn't happen. Market doesn't decide that, okay, today is Monday, let me go on trending day. Today is Tuesday, let me go on trending day. It doesn't happen like that. When trending day happens, then there has to be a strong participation. That means in the market, most of the people should be on buyer side. when there are more buyers, you know that market will go up, right? So that means trend day most likely happens whenever there is a breakout on daily time frame chart. That means when you go to daily time frame chart, you see that there is a strong resistance on the chart, and that particular day that resistance has been broken and the market is going above it. Such days are most of the time it's a huge trending day. Logic behind it, many traders think that whenever price comes near that resistance, this time also price will reverse, and they keep stop loss above that resistance level. Stop loss is nothing but buy order, and when all that stop loss gets triggered, market will start going up. And when many other traders, they see that market is going up, making a huge trend, they will jump into the trade to make a profit out of that rally, and that adds to fuel to the fire. And that is how trending day happens. So again, in a nutshell, trending days most of the time happens whenever there is a breakout on daily time frame chart. So now let's go to my laptop and I'll show you a couple of examples so you understand what I mean by breakout on daily time frame chart. Okay, first one I said there should be some technical breakout. I am sure already you know that what is the breakout. That means if there is any resistance on the daily time frame chart, this is the Bank Nifty daily time frame chart. This is the daily time frame candlestick. And if you see anywhere there is a strong resistance, and if that resistance gets broken, that can lead to big trending day. So for example, I can see that Bank Nifty, there is a strong resistance here, right? So you can see that almost 3 or 4 times around that level, Bank Nifty took the resistance, and this May 23rd candle has broken it. And same time, when you come to the Nifty, and if you come to May 23rd, if you draw a horizontal line, you can see here there was a resistance, again it took the resistance, again it took the resistance, again it took the resistance, and 23rd May, it made a huge candle. So let us go to 5 minutes time frame of this 23rd May candle in Nifty Bank Nifty and see whether it was a trending day. This is the 23rd May Bank Nifty chart, and you can see that on the higher time frame which we have marked the strong resistance, and once that resistance was broken, after that it made a huge trending day in Bank Nifty, and also in Nifty you can see that it made a huge trending day. So that is what the first one I said. If you see a strong resistance on daily time frame chart, and if that gets broken, such days most of the time can lead to big trending day. And now the second method to know which days are trending day. Second method is, assume that any stocks, any instrument, if you see that overall trend is a strong uptrend, on daily time frame you see that that instrument is in the strong uptrend, and you know that sometimes suddenly gap down happens when market opens in the morning. Why gap down happens? Gap down normally happens because of the global news. That means previous night there was some negative news in the US market or in some Asian market like a Chinese market, Korean market. It affects all the market. So that means suddenly when you see that 9:15, Nifty also opens with a big gap down. So whenever there is a big gap down and overall trend is bullish on daily time frame chart, most of the time catch up happens. Catch up means previous day Nifty closed here, next day Nifty opened this much gap down, and this news nothing to do with Indian market. That means it is just a knee-jerk reaction because of the global market. Then most of the time from here it starts going up. That means it will do a catch up and goes and fill that gap of previous day close most of the time. But this happens whenever there is a bullish chart on daily time frame chart. And what is the logic behind it? Logic is many people are getting at the discount. Same stocks maybe was trading at 200 rupees, very fundamentally strong stock, and next day because of global news gap down happens at 180, 185, then it is available at very good discount price, right? People who see that it is available at 180, previous day it was at 200, they will immediately buy the stock because they know that the stock is very fundamentally strong and they are getting at a discount. So now let us say couple of chart. Next one, I said if the trend is very bullish on daily time frame chart and suddenly day opens with a big gap down, then such days can lead to huge trending day. So you can see that overall trend is a strong uptrend, and here also you can see that previous day close was here, next day opened here, and it made a catch up. it went all the way till the close of the previous day candle. Here also you can see that it made a gap down opening. After that, it went and filled that gap, which was the previous day close. Here also you can see that previous day close was here. Next day it made a gap down opening and it made a catch up back to the close of that previous day candle. But if trend is not strong on upside, trend is like this sideways, and then gap down happens, then it is not a high probability. It has to be strong uptrend on daily time frame chart. Okay, you can see that this is the chart which I have seen on daily time frame. Previous day close was here. Next day it opened with a huge gap down, maybe due to some global reason, and after that it did not go down even though there was a gap down. It started going up and went all the way till the previous day close, and almost it filled the gap, right? Because overall trend on daily time frame, it was uptrend, so it has to catch up. So that means there were many aggressive buyers started buying here when they saw that it is available at discounted price. Now, third reason why big trend day can happen. Big trend day I have seen with my experience that most of the time it happens when first candle of the day, 5 minutes candle of the day, and when you go to daily time frame chart, that 5 minutes candle right at the 20 MA of daily time frame. Okay, so that means 20 MA on daily time frame, it's sloping upside. Overall sentiment is bullish on the daily time frame, and when market opens at 9:15, that candle is forming at the 20 MA of daily time frame. Most of the time big move can come on the upside, because you know that 20 MA is one of the very strong support when it is sloping upside. So that is why whenever price opens at 20 MA on daily time frame, probability of trending day is very high. Okay, next one I said, whenever there is a sloping 20 MA like this, and same time first candle opening right at the 20 MA, then such days you can expect a big trending day. So that means how it should be? It should be something like this. Can you see that this candle, this is the 25th May candle in Bank Nifty, opened right at the 20 MA of daily time frame and then made a huge day. We'll go and see it on 5 minutes time frame also. Just here I'm trying to show you that how it should be. It should be the opening of the candle, days open right at the 20 MA, then it can lead to big trending day. Like here in Nifty also you can see that 25th July it made a gap down, and where it opened? It opened right at the 20 MA of daily time frame. It was in the strong uptrend. I said overall trend should be in the strong uptrend. Chart should be bullish, and you can see that it opened right at the 20 MA and made a bullish candle. This is the 25th April on 5 minutes time frame chart. You can see that first candle opened here. 20 MA on 5 minutes time frame doesn't matter where it is. Okay, you don't have to worry about 20 MA on 5 minutes. You have to see when candle opened, whether it opened right at the 20 MA on daily time frame. If it opened at the right at 20 MA, then you can see most of the time such days can lead to huge trending day. And the fourth one and the last one is looking at the advanced decline ratio. What is the advanced decline ratio? Advanced decline ratio is only tell you that overall what is the market sentiment. That means you know that there are thousands of stocks in NSE and BSE, right? So if you see that there are 90% of the stocks are staying green and only 10% of stock, that means out of 2000 stocks, 1800 stocks are in the positive, only 200 stocks are in negative. That means overall sentiment of the market is positive. Suppose out of 2000, 1500 stocks are trading in the green and 500 stocks are trading in red. That means it's a ratio of 3:1. That means every one negative stock, 3 stocks are trading in the positive, which is a very positive advanced decline ratio. But before applying advanced decline ratio, you should know that initially when market opens, advance ratio is positive, decline ratio is trading here, and over the period of time graph of advance ratio can come down and graph of decline ratio can goes up. That means most of the positive stocks are now turning into the red. So that is why you have to keep a watch on advance decline ratio when you are looking at the chart. I made a small recording during the live market to show you which website I used to know advanced decline ratio. and how you can interpret based on advanced decline ratio. Now I'll show you on my laptop. This is the 30th of October chart, Nifty chart, 5 minutes chart, and time is 10:05 a.m. during the live market. And you can see that Nifty currently trading within the previous day range, right? Remember, I'm not trying to show that it is a trending day or whatever, because trending day, it has to be some technical breakout. But here, Nifty trading within the previous day range. So for that, I refer a website called traderscockpit.com. This is one of the website where you can get the graph of advanced decline ratio. And when I keep the mouse, you can see that there are around 1660 stocks are in green and around 359 stocks are in red. So overall, it was a almost 4:1, right? Ratio is 4:1. That means for every one bearish stock, there are 4 stocks which are bullish. So which is very positive. But as I said earlier, this graph may be currently showing that advanced graph is showing 1660 and decline is 359, which is very bullish. But it is not that every time it will stay like this. After some time, it can make opposite. That means advance ratio can come down and decline ratio can go up. That means positive stocks are turning into negative stocks. Okay. So that's why it is little bit tricky while in the live market. That's why don't depend only on advance decline ratio. Keep it as a backup along with the technicals. Like look at the price action. If there is any breakout, then go and see what's advance decline ratio is saying. So based on that, if I have to make an analysis, I feel Nifty for the short term, that means temporarily for some time, likely to stay positive. Why I'm using short term or temporary? Because advanced decline ratio doesn't mean that it will stay like this throughout the day. It can change after some time. We'll come after some time and let us see whether Nifty went bullish or no. Okay, now next update, you can see that earlier update was at 10:05 a.m. Now it is 11:25 a.m. That means more than 1 hour. And that time, somewhere here, Nifty was trading, and I was telling you that advanced decline ratio is showing very bullish, which was 4:1. And as per the advanced decline ratio, Nifty likely to stay positive. And you can see that after that, Nifty is going up. Though it was not a big up move, but still it did not go down, but it started going up, right? And if we come to the advanced decline ratio, you can see that advanced decline ratio graph is still intact. Earlier it was around 4:1. Now it is 5:1. That means still it is showing bullish advanced decline ratio. And when we come back to the chart of Nifty, now Nifty, you can see that it is currently trading near the previous day close, which is a very strong resistance. From here, we have to see. If it makes a breakout, there is no change in the advanced decline ratio. That means it is likely to be a breakout. But if advanced decline ratio is coming down, that means it is likely to be a sideways day. And again, I am repeating, don't take the decision of trending day based on advanced decline ratio. First, give importance to price action, technicals, then keep advanced decline ratio as a reference. Now let me show you 4 methods when it is not a trending day. It is most likely to be a trap, most likely to be a reversal day. And the first way to know that whenever CPR is very wide, such days are very unlikely that it's a trending day. That means most of the time it's a trap or reversal. So if you have read a book of Secret of Your Boss from Frank Ochoa, in that Frank Ochoa says that whenever there is a CPR is very narrow, most of the time it's trending day. With my experience over the period of time I've seen, it's not very high probability setups taking the trade based on just narrow CPR. But same time, he also says that wide CPR mean most of the time likely to be sideways days. That I also agree that most of the time I've seen whenever CPR is too wide, most of the time market stays sideways or in zigzag. Okay, so that means market opens at 9:15 and suddenly it starts making green candles. Then first look at the CPR. How is the CPR? If it is narrow or average, fine. But if it is very wide, then it is likely to be a trap. That means it's not a trending day. Okay, next one I said, if day CPR is too wide and market opens with a bullish candle, then chances of reversal is higher. That means instead of taking a long trade expecting market to go up, it is most of the time make a reversal and stays sideways. So best example is this 21st October in Bank Nifty. Bank Nifty opened with a huge bullish candle, back to back bullish candle. And if you have taken a long trade, then you would have immediately got trapped because it started reversing. So that is why look at the CPR, whether it is a narrow CPR or it's a wide CPR. If it is narrow or average, then it is fine. But it is too wide, like you can see in this chart, then it is unlikely that such days can lead to a big trending day. So most of the time, it's a sideways day. Second method, when it is not a trending day. If previous day was a huge trending day, the next day most likely to be a sideways days. That means assume that today is Tuesday, previous day was Monday. Monday you already seen that huge trend happened in the market. Next day you see that market stays sideways. That means after the rally previous day, next day market most of the time stays sideways. When I was a new trader, previous day was a trending day, next day I would take the position thinking that today also market will rally like that, and wondering why market is not going anywhere, it's staying sideways, because yesterday market already rallied, so today market is taking the rest. Okay, next one I said, if previous day was a huge trending day, the next day most of the time market likely to take a rest. That means it may stay sideways or it may make a reversal. So this is the July 26th. Bank Nifty opened with a gap down and made a huge move. So it was a huge trending day, right? 26th was a huge trending day. So 27th, what happened? 27th, you can see that again it made a huge bullish candle and it looked like it is going into the trend. But after that, what happened? After that, you can see that that trend did not sustain, right? It went only till here, and after that, that trend was reversed. So that is what, if previous day was a huge trending day, then most of the time next day it is likely to be a sideways day. And third method to know when it is not a trending day, when there is a huge gap up. I already discussed in my earlier method, trending day method, that huge gap down, overall sentiment is bullish on a daily time frame, then most of the time market makes a catch up and it leads to trending day. But when there is a sentiment is positive on daily time frame, huge gap up opens, very big gap up opens, then most of the time gap up happens and it won't go anywhere. Entire day market hovering at that level, or it comes down and fills that gap of previous day close. Okay, next one I said, if there is a huge gap up and after gap up, if you expect market to go in a huge trend, then it is most of the time unlikely to happen. That means you can see that here on May 2nd, it made a close here. Next day there was a huge gap up on May 3rd, and after that let us see what happened. After that you can see that it was a total reversal. That means gap up did not sustain. Another example, you can see that September 18th close was here and September 19th it made a huge gap up, but after that did it go in a huge trending day? No, right? It did not go in a huge trending day, rather it started reversing. Okay, so that means gap ups mean, don't be under impression that it is a bullish structure, it is going to make a huge trending day. But there could be some exception. What are the exception? That means if this candle when broken, if you go to daily time frame, there was a strong resistance here. Okay, there was a strong resistance here and that resistance was broken, then yes, even though there is a gap up, it can lead to big trending day. Or if there was any strong supply zone here and it has broken, then it can lead to big trending day. If there is no resistance, this candle has not broken any resistance on daily time frame, neither it broken any supply zone, it is just a gap up because of the global markets are trading in a big positive, our market also opened gap up, then most of the time gap ups can reverse. That means it will reverse to fill the gap. What is the gap? Gap means previous day close and next day open. So that means next time when you see a big gap up, see why gap up happened. Is it because of some reason like technical breakouts? Yes, then it can lead to trending day. But if there is no technical breakout, nothing, then rather than going in a trend, going for a reversal may work. Okay. And the fourth and last one is, whenever there is any big news comes, any catalyst, any event happens, any news comes which is positive, and you see that suddenly market start making a huge bullish candle, and you think that news is very positive, you will go and buy it, and after that you see that market stays sideways or reversal. So what is the logic behind it? Why even though positive news, market is not reacting, instead it is staying sideways? And the reason is, many insiders already know that news. You and me and many retailers, we don't know the news, right? We only know the news when it is out on media. But many insiders, they already know the news before it came on media. So already they have taken the position. When there's a huge green candle, they already made profit. So that is why you see that many times, even though news is positive, market still stays sideways or reversal, because many insider who already knows the news, they are booking the profit. So these are the 4 methods to know which days are likely to be a trending day and which days are not likely to be a trending day. So that's it from my side. And once again, I wish you and your family a very happy and prosperous Diwali. And just to inform you that I launched 2 new courses, that is in the commodity segment, that is the crude oil course and gold and silver course. If anyone is interested to learn more about commodities like crude oil, gold and silver, they can go below this video and you can check out my new commodities course. And if you are interested, you can consider buying it. So that's it guys, and I'll see you soon with a new educational video. Until then, bye and take care.